Time for our big picture discussion to wrap this week with Mr. Cooper Howard and Kevin Gordon. Kevin's a senior investment strategist and Cooper's director and fixed income strategist. Good afternoon, guys. We've got a nice strong rally, it seems, here into the close. Kevin, talk to us about stocks and what kind of ground we recovered. Is this an impressive week? Does this get us back on track? Still work to be done in the short term? How are you seeing it?
Gets you back on track for some areas, especially, I think what's interesting is some of these bounces in areas like communication services today. Last I checked, you're at about a 4% and change gain for that sector after a 4% drop yesterday. So I think a lot of it is a little bit of a bounce from maybe some things that had seemed, oversold. Parts of the financials got that way, a little bit earlier in the week, or parts of communication services looked like that yesterday. I think what's more interesting is to look at the leadership profiles since the market's most recent peak in late March. And the two top performers right now are energy and utilities. So it's not really sending the clearest message in terms of cyclicality or defense, because you have, a deep cyclical sector, but you also have a deep traditional defensive sector being utilities that are leading. So I think right now it's more about looking at longer term trends, what might be driving those. For energy, I would argue probably a firmer increase in oil prices over the past few months. For utilities, probably still working off, a deeply oversold level that you got to in October of last year.
Okay, so you're saying kind of mixed messages a little bit if we kind of go from sectors as defined or themes, defensive versus kind of more cyclical and aggressive. What about the interest rate sensitive groups, like the Russell representation of the lower quality names? Did the possibility of a wider broadening out of that group get killed by the bond market, Kevin?
It's tough for the Russell, because if you look at some sectors, there are some in the Russell that have actually done quite well. So energy industrials, to some extent, even parts of financials, not necessarily the banks. But if you look at other areas like telecommunications, that is at hovering near a 3 or 4 year low, depending on if you're looking at it in absolute terms or relative to the Russell 2000 itself. So I think you have to kind of, peel the onion back a little bit when you're looking at the indexes right now, especially in a post-pandemic environment, because, the index could be telling you one thing, which for the Russell 2000, it keeps bumping up against a ceiling and hasn't really done much over the past few years, is really struggling to, firmly get into a bull market. But if you looked at some of the underlying breadth within some of the sectors, there is some strength there. And also sector composition itself, the Russell 2000 is weighed heavily by healthcare and consumer discretionary. So those two sectors, one of them being hit hard by biotech, the other being hit hard by just a weakening consumer at the lower end, I think that makes it harder for the index itself to rally.
All right. Okay, like that. Let's talk some bonds. Bonds. I love them, Cooper, and we're holding 4.65 in the 10 years. So was there continued conviction in the bond bear trade this week, or what do you make of some of the pushback that we got today?
Yeah, so I think the move on today, we're not seeing too much of a big move today. 10 years down, just a few basis points. 2-year continues to hover right around that 5% level. So I think that that's probably a technical level. Tended to be that those round numbers are psychological levels, Oliver. So I wouldn't be surprised, given if we don't see any major moves in the data, that we might hover around there a little bit. So what I think, though, what we looked at for today's data, we obviously got some inflation data. Wasn't as bad as expected. So I think that caused really the market to really breathe a sigh of relief. We also got the spending and the income data, and I think that was better than expected. So that bodes well for future results and future releases. So I think that's part of the reason why the Treasury market really hasn't sold off too much, hasn't moved too much on the day so far.
And we got a little bit of stickiness in inflation expectations from the sentiment number. I mean, all of the inflation stuff this week continued to look on the warmer side. How does that set us up going forward, Cooper, as we will hear from the Fed after this blackout period ends pretty soon?
Yeah, so I think then what it's going to reinforce is the message that we really have heard from the Fed already, and that's one of patience. So inflation, like you had mentioned, it isn't coming down as quickly as expected. We can slice and dice it on a 3-month, 6-month, 12-month annualized basis, however we want to do it. But the point is, it's not trending towards that 2% level that the Fed wants it to see as quickly as probably they want it to get there. So even though we are in a blackout period, what I would not be surprised is once we come out of this and we have the Fed meeting next week, they're probably going to reiterate their theme of patience. It wouldn't be too surprising if Chair Powell downplays the March dots plot which projected 3 interest rate cuts. I think 3 interest rate cuts at this point seems a little aggressive, so I'm expecting more they tone it back down to maybe 1 or 2. Now, this isn't a meeting that's going to be accompanied by the SEP or the DOTS plot, so I expect most of the information that we're going to get is from the press conference, and then maybe set the stage for what we should expect later on down the road. But again, I think what we should expect later on down the road is more patience.
All right, so they can polish a little bit the message now that they have a week to process and a week off from the public realm. Thank you guys for joining me. Great stuff. Kevin Gordon and Cooper Howard with the stock and bond big picture analysis from the week.